Well, good morning, brothers. I hope you're having a good day. And as usual, it's always a good day to trade. But today is not a trading day because today is a holiday. Then the purpose of this video is to calculate the weekly profit and loss what we have done so far. So, without further ado, let's begin. Well, before going to profit and loss, you definitely have thought out who am I, why I'm doing this thing, and what is the purpose of this channel. Well, I'm definitely going to answer this thing, but not in this video. I'm going to make another video about that thing. But specifically, I think you would have a question that what kind of capital I'm using, what kind of rules I'm following. So in this video, I'm going to tell you what kind of capital I'm using. So for the first part, what kind of capital I'm using? So I'm trading with capital of 1,75,000. And if you think I have 1,75,000 like in my bank account, so that's not true. I'm doing this by paper trading. What is a paper trading exactly? It is just imagining you have 1,75,000 and trading on it like you have actually have 1,75,000. So if we put this thing simply, that you imagine you have the money to trade and you trade based on that money, but the what you have traded, you actually write down in blank piece of paper, or you could write down in Excel sheet, and you just analyze how much profit you have made, how much loss you have made that day, weekly, monthly. So in short, you would know you are improving before trying it with real money and losing, because market is risky and you may lose a lot of money while learning first. So practicing first before you are perfect, and then trading with the real money. We really have a good week according to me, because most of our trade were positive rather than being negative. So this week we actually have 5 trading days, of which we take 7 trades, in which we lose 2, and the rest of 5 were profitable. You could pause this thing and definitely cross-check with my previous video. Just the 10th minute trade wouldn't be available because the video got corrupted and I couldn't upload that thing. But we made a profit on that day. Rest were uploaded. And overall, you could say it was a really good profitable week. So our total profit was roughly around 12,675. Of total loss were 1,750, which put our grand total to 10,925. This thing doesn't calculate the brokerage charges and the taxes we pay on this thing. So it would be roughly around 9,000, 8,000 rupees of profit. If we trade continuously like this thing, we will definitely reach a target of 30,000 rupees per month, and would also recover our 1,75,000 investment within 4 months. Our average return would be more than the bank's FD interest. So, percentage return, that would be really good. But once again, stock markets are really risky. You should definitely learn, research, and practice before putting your money into it. This brings us to a second question: what kind of rules I follow? Well, there are a lot of rules I follow, try to follow at least, but there are 7 fundamental rules, or you could say concrete base, which I always follow before trading. So let's begin what they are. Rule number 1: never risk more than 1% of your capital. So I trade with roughly 1,75,000 rupees. I do not risk more than 1750 rupees as a daily losses, because if you lose more and risk more than it, your capital would be easily blown within weeks. So this is the first rule which I follow. For example, you could see this trade I have taken, absolutely perfect trade, 70 points risk and more than double the reward. So rule number 2: never run behind the market and always control your emotion. That means, well, this is thing I've learned really badly, because I've used to trade in the market after just a minute after they have opened. So if it's going up, I usually buy. If it's going down, I usually sell. This thing could really damage your capital. Like in this example, the market opened up it goes up for a couple of time and it fall down. So you made a loss actually on that day. Furthermore, rule number 3, that is wait for the right setup. This is most important rule because if you don't wait for the right setup, the probability of its working decreases. Secondly, you mess up your risk to reward ratio, which is really bad for your capital because it just starting to drain out little by little after you start losing. So in this thing, we could see in this example, this is a really good example which I've first seen. Good risk to reward ratio, and the trade was perfect. We win roughly 1:2 risk to reward. Rule number 4: always know where to exit. It's like a human tendency. If you see a 99 points you have got, and there is a support at 100 points, and you hold your trade till 100 points, the market would tend to, as it touch 100 points, it reverse, and you might have to exit at 20 to 10 points as your profit rather than 100, all because you were greedy. So in this example, you could see there is a support line and we exited just above the support. So as soon as it touches it, the market reverse and you get stop out. So here in the second one, you got stopped out at 40 points, but then too you hold on this trade till your losses get to 200, 300 points by losing most of your capital. Rule number 5, never add on losing trade. If you see your trade is going opposite to your direction, get out of the trade at a small loss rather than adding on the trade, that averaging on this trade and making your small loss a huge mistake. That is a big loss. So as you could see this in the yesterday's example, you could actually have got out of this trade with a small loss. But if you have hold this trade for a long time, you eventually have blown up your account at the end. Trade a plan. You always plan the trade at the first, at the pre-market analysis, because you generally know in which direction you have to take the trade. So if the market opens in the completely opposite direction, or just open completely 200, 300 points or 600 points gap down, you just have to wait for the right opportunity rather than running behind the market. So if you have a plan, stick to that plan and trade that according to that plan in the market. Important rule number 7, that is never forget rule number 1 to 6, which is really important because rules and consequences, that's how you deal in the market. You break the rule, you face the consequences. You follow the rule, you face the consequences. So either way, it's going to be a good one or a bad one according to either you follow or break the rule. So that's it for today. Definitely comment in this video what kind of rules do you follow in your life. Thank you for watching this video, and make sure you're going to like, share and subscribe my other videos